How to take payment from customers is a major anxiety for retailers in what the big banks call high-risk categories, such as cannabis products or vaping products for nicotine. Retailers in high-risk categories face endless obstacles to obtain payment processing for the sale of products which are still technically illegal in Canada. But with legalization just around the corner, is this a problem of the past, or will high risk haunt retailers well into the future? The complex array of financial services that allow a business to accept credit card or bank debit card transactions are called merchant services. And with over 75% of all transactions now made electronically, either at point of sale or online, they are essential to doing business in Canada. Underpinning the payment processing system is the Merchant Category Code. Every legal business in the world is assigned one. Other businesses which operate in a gray area may receive a merchant code, but be classified as high risk, making it near or next to impossible to take electronic payments. The final arbiter that decides which categories and what businesses get payment processing are the big banks, since they underwrite the risk. But sharing in that risk is a complicated mix of partners. These partners include credit card associations such as Visa and MasterCard, which set the interchange rate and provide batch clearing. Point-of-sale processors such as Moneris, Global Payments, and TD, which provide the payment terminals consumers use in-store. And payment gateway companies that provide the servers and software, allowing for secure transactions to be made online. A bevy of other providers service niche segments of the Canadian market, including payment solutions for high-risk categories like cannabis products and vaping products for nicotine. For Canadian cannabis retailers, securing payment processing has long been a dicey affair. With no merchant category code of their own, marijuana dispensaries often tweak the definition of their business in order to qualify. This workaround is tenuous and not entirely kosher. But having a merchant category code provides no guarantee, as the Canadian vaping industry found out. RegWatch reported last year, MasterCard in the United States decided to place vaping products into merchant category code for tobacco, thus classifying vaping as high risk. The move provided TD Bank the pretext to arbitrarily cancel online credit card processing for over 150 vaping retailers in Canada. How would you characterize TD's behavior on this matter?
Cruel. I mean, they gave absolute, to give 2 or 3 weeks notice for people to find a new, you don't even have any ability to negotiate terms with another merchant. You got to take what you can get.
Joining us today to discuss the fortunes and pitfalls facing the cannabis and vaping industries when it comes to parting people from their money is Carl Zank, CEO of Zank Payments. RegWatch viewers should recognize Carl, as he's the one that saved the day when TD Bank torpedoed the vaping industry last year. His unique brokerage model, specializing in businesses classified as high risk, allowed him to bundle nearly 100 vaping retailers into a single negotiating block, secure new payment processing, and move most of the businesses over in just a couple of weeks. Carl, thanks again for joining us on RegWatch. Wanted to get you back on the show to share some insights on how the big banks and credit card companies are dealing with cannabis and vaping as both wind their way through to legal status. I should point out to our viewers that when we refer to vaping on RegWatch, it's always nicotine vaping, not cannabis, at least for now. Carl, first off, how easy is it for a retailer to get merchant services in Canada?
It's complicated when, there's your simple mom and pop shop that general retail or, like an Italian kitchen or something like those are slam dunks. Those are very easy, and, they're often, there's a lot of competition for those types of businesses. But it does get a little bit more difficult depending on the industry that you're in. So, we've had the experience with the vaping e-liquid industry, where some processing companies say, hey, you know what, our rules and regulations and our bank policies simply state that we don't cater to that industry. So sorry, and have a nice day.
Decisions like that, Carl, how much are they affected by the merchant category code?
If we look way back when you and I first spoke, there's a merchant category code for vape stores, and there's also one for vape stores online. So TD said at first, they said, okay, we'll take both vape stores online and we'll take vape stores in store, in retail. And then they made an abrupt decision and said, we're dropping this merchant category code for online vape stores, and that was it. They cut 150 accounts, and they no longer support it.
Carl, is there a merchant category code for cannabis products in Canada?
There is one today. That's a good question. So there is one today, but it's very specific towards the licensed production license number. Visa and MasterCard have created a 4-digit cannabis code to federally sell it. That's correct. Grow it and sell it. You can go to any processor in Canada, like Global Payments, Moneris, Merco, Cygate, any of these guys, and they will take your business 100%. They won't even blink an eye, because when you submit your application, you're going to show them your license from Health Canada. And of course, I would put down the proper merchant category code to go with it.
Carl, what about marijuana dispensaries? Based on my research for this episode, I can confirm many do take credit cards. So do they have a merchant category code of their own?
There is not one for a dispensary. But if you're asking me, is any of this legal at this point? It just unfortunately isn't. I think after July, there's going to be a multiple of MCC codes. I think there's going to be a very descriptive measures per province of, Ontario, no dispensaries, liquor control board's doing it. Quebec is online only. Alberta, dispensaries allowed. BC, I believe dispensaries allowed. Like, go get it. So right now, gray area, not really. You're not supposed to be doing it. If you get caught, you get caught, and if you're doing it and it's working, then that's great. But yeah, come July, it's going to be a lot more legit, and I think really good point on that. It's going to be very competitive. I think looking at the Zank Payments broker model, I've spoken with probably 10 different processors in Canada, all the high risk ones and all the legit ones, the bigger ones that are backed by our chartered banks, and they're all on board.
Carl, explain for us how the banks and credit card companies play a role in the legalization process.
So let's keep it simple. Visa, MasterCard, and the banks. Let's use, the big banks here. Banks, they get in a room, probably a smoke-filled room with some scotch. They have a conversation, and maybe the government's there and says, okay, you know what, we want to do this. This is what the voters wanted. That's what they voted for. So we want to do this. And if we do this, are you going to support it? There's jobs and employment and revenue and what have you. So what do you need to see? Or it could be vice versa. The bank could say, okay, we'll take it based on these provisions and what have you. So they definitely all work together. So as soon as they say, yay, we're going to do it, then the banks go, okay, MasterCard, Visa, Interact, guys, create, Amex, Discover. We're going to create a 4-digit code. It's going to be 5555 for the legal sale of marijuana.
And there you have it, legal pot, which can be properly paid for through the privilege of plastic, which of course means profit and lots of it for the processors and the banks.
It's big. It's big. They already have a small tidbit of it today. Moneris and Global, they share collectively, they must share about 30 of the licensed producers in Canada. They've seen the risks, and I doubt there are any. They've seen the legislation, which they're very comfortable with, and they've seen the revenue. And right now, it's still, it's still a gray area. People think, oh my gosh, it's weed, and what the heck, we're selling it. And some of these guys are probably getting gouged. But once July, the proper legislation comes in and they open it up, there's going to be a lot of movement, or there's going to be a lot of leveraging with existing contracts. And but yeah, the banks, at the end of the day, they'll always make their fair share.
Carl, I think banking and fair share may be an oxymoron, but nevertheless, let's end on a high note. We're all familiar with bankers, and they're not known for being radically hip or anything.
Yeah.
But do you think they might be sampling the product?
Do I think bankers are sampling? I think there's, I sure hope so. I sure hope that when I said they were in that smoke-filled room, I sure hope that it wasn't cigar smoke or just vaping. I think hope it was a big doobie.
Well, that's it for this edition of RegWatch. Before you head off, please like us on Facebook and don't forget to follow us on Twitter. For RegulatorWatch.com, I'm Brent Stafford.